Welcome to this budgeting and spending brief from Serve and Protect Credit Union. We're a free employee benefit that's available to you. We're not for profit. We're here to help you save and just there as an option if ever you need to borrow throughout your career. I'm Rob Lovesey. I'm going to be delivering today's session. It's really important for me to just start and just say that although I'm going to be sharing specific topics about financial circumstances, I'm not a financial advisor, so I'm just raising awareness to some of the hints and tips that have helped our members along their own savings journey. Because I deliver these sort of sessions, whether they're face-to-face or online, but hopefully you find them useful and go away with some useful knowledge and insight. As a credit union, as I said, we're a free employee benefit. We're really proud to work with over 36 police forces across England and Wales. We were actually founded in 2003 after a merger of 7 police constabulary credit unions. Since then, we've evolved. As I say, we now serve 36 police forces in England and Wales. The service is available to officers and police staff. We also, in 2012, expanded our service to now work with His Majesty's Prison and Probation Service, the Ministry of Defence in 2015, and more recently in the lockdown pandemic, the Fire and Rescue Services and also health services. So as I say, we work with a range of employees. They help their people save and borrow with the credit union. And again, the repayments come straight from their pay. You can see here, as a credit union, we're really proud to serve over 43,000 members. You can see our mobile app, so everyone manages their money just on the mobile app. We look after about £80 million worth of your savings. We currently have about £70 million out on loan to our members. So this is just to give you some context, because a lot of people don't realise this free employee benefit is available to yourself. And actually, we're the size of a small building society. So it's a really it's a success story within the police family. And it's just hopefully as a result of today, you know we exist. And if you want to use our service, by all means. Start off though, what makes a credit union different? So we're similar to a bank or building society. We help people save. We're there if they need to borrow. But what makes us different? We are exclusive. So only certain people can join. So if you work for any of those markets that I previously discussed, you can see if your employer has made it available for you to join the credit union and save and borrow with repayments from your pay. Once you join, any family members can also join, but they'll just make their repayments straight from a direct debit. They have to live at your same address, and they have to be immediate family members such as parents, spouse, partners, or children. We are a cooperative, so this means we are owned and run by our members. There are no private shareholders. So the money we make as a credit union just goes back to you, our membership. You can even turn up to our AGM each year and have a vote on the running of the business. We've got a volunteer board of directors. A big difference there you can see at the bottom is that we are not for profit. So it doesn't mean we don't make a profit, because we have to make a profit to be sustainable. But what it does mean is those profits we do make, we pay back to our members in the form of a return on their savings. So we pay a dividend on your savings annually. We also reinvest some of that money back into the credit union to help improve the products and services that are available to you, our membership. So as a credit union, we're incredibly passionate about improving the financial resilience of those who serve and protect the nation. We know that if we can play our part to help you improve your financial resilience, you can just focus on your day job and do that to the best of your abilities. Today's session is about budgeting and spending, but we know finances just pay one aspect of a wider holistic approach in terms of your well-being, whether it's relationships at work, at home, your mental health, attendance at work, or productivity. We know finances play such an important role in all those aspects of life. First of all, though, let's define what we mean by financially resilient. Essentially, we want to make sure that you've got enough money saved, so should an emergency arise, like say for example your car breaks down, you've got enough money saved in an easy access account to be able to respond. We're finding that a lot of people at the moment are finding it incredibly difficult with the cost of living crisis to find the money to save. So we also just want to put some slides in to make sure you know where you can turn to for financial support if you need it. You'll hear a lot in the workplace about financial well-being. This is your short-term relationship with money. We're finding that a lot of colleagues have generally quite good short-term financial well-being. So have they got enough money left over at the end of the month to take the other half out for dinner, or afford the occasional takeaway. Yeah. What we're finding though is that they have quite poor long-term financial resilience. So they haven't really thought about having money saved up in an easy access account to be able to respond to those financial emergencies or shocks, such as their car breaking down. So today's session is going to be thinking about this long-term resilience. These are the typical things that happen to our members throughout their life or their career that can impact them financially at no fault of their own and can be unexpected. You know, you might be watching this webinar and everything, life is good, and you're not impacted. You never know what's around the corner. You need to start thinking about preparing for tomorrow. When more recently in the lockdown pandemic, you know, our phone was off the hook. Our members were seeking support, even though they were in paid employment and they were probably doing more hours and worked more overtime than they've ever worked before. But the reason they were seeking support was because their other halves experienced health issues, or you can see job loss there, they were furloughed or lost their job. And the dependence on that dual income within the household just overnight took a hit and they really struggled to make their repayments on their mortgage or their bills. So we want you to start thinking about building that individual personal financial resilience. So should these things happen to you or your family, you've got some money available to be able to respond. Relationship breakdowns we've got listed there. We see the data. Due to the nature of your jobs, the high stress environments, irregular shift patterns, there is unfortunately a high level of relationship breakdowns. Well, again, we want to make sure that you're ready. So should something happen, you've got that individual resilience. You know, some of our most loyal members are people that have been extremely financially resilient. They've had a dual income, they've good credit risk, and they've been able to borrow from providers previously. And then they have this relationship breakdown. They lose that dual income. They're no longer a homeowner. The people that lent to them before, they haven't been able to turn to for support. You need to know that credit union is just there as an option to be able to turn to if you need it. So ask yourself the question, how ready are you? Have you got enough money saved to be able to respond to those financial emergencies such as your car breaking down? Have you got it in an easy access account? We know that a lot of our members in paid employment have attractive pensions, but these are lots of long-term savings plans that they can't access till later on in their career. So we want to make sure you think about having money that you can access immediately in an easy access account for the short term. So what can you do to build your financial resilience? Today's session is about budgeting and spending. These are just some simple tips shared by our members to help you understand the concept. We have a lot of people that when I do these sessions, I ask them, have you done a budget? A lot of people just haven't done a budget, whether it's because they lack confidence with Excel or maths, or whether it's just head in the sand, they haven't been sort of looking into their finances to better understand it. You know, a lot of people come to me and say, I really struggle to save, Rob. First question I ask is, have you done that budget? And a lot of them haven't. So it's a really good starting point. So understand what a budget is. It's a plan for managing your money, essentially. You can create it based on an estimate of your income and looking at your expenditure, whether that's done on a monthly or an annual basis. Try and categorize your expenditure. Try and break it down into fixed areas of expenditure, variable. Try and work out how much you've got left over at the end of the month. Whether you've got money left over to save and build that financial resilience, or if you're spending too much, do you have to look at certain behaviours and try and change those behaviours to try and free up some cash to be able to save. We surveyed our members. 37% of respondents had never completed a budget plan. So again, that's 1 in 3, just from our members alone that were surveyed, haven't done a budget planner. This figure is usually more when I present to audiences like this. What's the benefit of doing a budget? It helps better money management. You stay on top of your finances. You have a better understanding and appreciation of what you've got coming in and where your money's being spent. It helps to ease financial stress. So a lot of our members speak to find it incredibly de-stressing. That's not distressing, it's de-stressing. Do your budget if you're suffering financially and you are someone that maybe doesn't want to look at their finances, doesn't want to look through their statement because they're scared of what they're going to see. That can cause a lot of anxiety. Once you do your budget, you may be pleasantly surprised because you might realize, well, actually, I'm not spending as much as I thought, or I am spending in areas, but these are areas that I can change those behaviors and actually start to get back on track financially. It can help you save for those wants or needs in life. There are certain things you want to aspire to save towards, but actually doing that budget can actually find some of those savings to put aside to start saving for those aspirational costs. And it also just generally helps your money last longer. Every paycheck, you want to make sure that every pound that you earn is being utilised and going as far as it possibly can. By doing a budget, that's your first step to trying to identify where your money's been spent and where it should be, where it shouldn't be, what approach you want to take. So think about the budget. Here are 10 simple steps to get you started in terms of your budget. Step 1, gather your financial information. Take some time, sit down, try and work out, your most recent pay slip, how much money you have coming in. Look at your loans you may have, check your credit profile, make sure you understand exactly what credit commitments you have, what your direct debit repayments are, what your utilities are. You can break these down. So you've got all your information in one place. Once you've got that information in place, you can then start to calculate your income. So you can look at your pay slips, whether you do part-time jobs, what kind of overtime or bonuses you've had in more recent years. You can start to then get an overview of your total income that's coming into your household. This might just be for you, or you might want to take into consideration your partner's income as well, so you get an appreciation of what your household is bringing in. Once you've done that, you can then list your fixed expenses. So once you've got all your statements, your bank statements, credit commitments, etc., you want to then try and identify those costs that will stay the same every single month. So whether it's your rent, your mortgage, utilities, mobile phone contracts, insurance products, council tax, try and think about these things that just stay the same every single month, and you can start to build a picture. So all of a sudden now you've looked at your money coming in, you've then worked out what's going out on every month in terms of a fixed expense. Then you can start to consider and calculate your variable expenses, like what's left over. What are you spending on that changes every single month? That might be shopping, it might be luxury items, it might be going out for dinner, it might be takeaway. These sort of things that you're spending on, you're not really sure how much these are costing, but you can start to identify how much you are spending in these areas, and you can start to take back control and take ownership. Once you've done that, and you can start to put it into a budget, whether it's an Excel spreadsheet, we've got tools on our website which I'm going to share to help you budget. You can then work out how much money you've got left over. Ideally, you want to be having money left over because that's essentially your savings. That's money you can use to save for aspirational costs or put some money aside for building that financial resilience, having money for an emergency to be able to respond. So try and plan for the unexpected. Try and think about things that may arise throughout the year. What crops up? Is it someone's birthday? Is it anniversaries? Is it planning for Christmas? What are these things, these big items that mean a lot to you that do often surprise you and come from nowhere? For me, home insurance. Sometimes that's a cost that sometimes I completely forget about. I get a bill annually. These are surprises to me, but you'll have your own surprises. So try and forecast them and think about what's coming in the future. At this point, you can then start to calculate the difference. So you can work out your fixed costs, your variable costs, what forecasted expenditure you might have in an emergency throughout the year or the month, and then you've got your income, and then you basically just do a calculation, so you subtract your expenses from your income, and that will give you an amount of money that's left over. Again, I mentioned it previously, that is essentially your savings pot. That's money that you can put aside and you can use for different aspirational things, whether it's savings goals or planning for a rainy day for an emergency. Set a goal. Now you've worked out how much you have left over, some people find it incredibly rewarding to set a goal to try and help them save. There's psychology behind it, there's documents you can read, reports, but essentially you can set yourself a goal to save for an aspirational cost. We're going to look at some of those savings goals further on in the presentation. Or you might find that you actually haven't got money left over at the end of the month, and actually you're spending more in certain areas. So you may need to consider reducing expenditure across areas. If you recognise you're spending too much, you might want to change behaviours, or you might have existing debt. You might want to consider something called debt consolidation, where you try and pay off that existing debt and you try and save money by borrowing elsewhere and saving money on your monthly repayments. There's different ways you can look to make those savings. Step 9 out of 10, just track your spending. So again, this goes into an added level of budgeting. So where you've identified that you might be spending more than you can actually afford, you might want to actually look at a more detailed daily analysis of where your expenditure is, because that will probably give you the categories and the items where you're spending or overspending on items that aren't essential. I'm going to share some slides about the cost of coffee, alcohol, takeaways. These sort of areas are places where people typically identify with and soon recognise they're spending too much, and they can change their behaviour to make some savings. And finally, find your motivation. We said about saving goals, but just make sure if you can stick to those goals, set reminders on your phone, different things around the house that are constantly reminding you about a savings goal. Because what we find, and I say what our members tell us, is having that motivation helps people keep on track with their budget. And then when they do their budget plan, they're more likely to then revisit their budget in the future and continue to make changes to try and achieve this goal. There are lots of different budgeting methods that are available to people. We're going to talk about these 4. It's optional, it's personal preference depending on what works for you. So you've got the envelope system, zero-based budget, 50-30-20 rule, and pay yourself first approach. Now, what's the envelope system? This is a bit of an old school approach, and traditionally, if you speak to your parents, they may have done this. This is before the time of online banking and mobile apps. But what people would actually do is when they get paid, they're paid in cash or withdraw the cash from their bank account, and they would actually put it into physical envelopes set aside for that monthly expenditure, whether, the example there's groceries, eating out, or paying off debts. And then once that's money been spent for the month, that's it. They know that's what they've got to work with. Now, obviously, technology's evolved, and now we're at a system where you can have these envelope systems. It's probably more like jam jar accounts or mobile apps or savings accounts, where you can just allocate money for specific purposes and divert it straight into savings accounts. So you've got your own sort of form of online sort of envelopes. Some people do that. Some people really like that approach. There's also zero-based budgeting, and the idea of this is once you've worked out what your income is, you can then take out your expenses and you can try and itemize all your expenditure for the month to try and end up with a 0 at the end of it. Now, you might think that's strange. Why are you trying to aim for a 0 at the end of it? Because if you've got money left over, that amount is sort of disposable savings, which you can then use to put towards a budget or towards a savings goal. So essentially, you know that as soon as your money comes in, you've worked out your expenditure, you've included things like you can see on here, you've got your expenditure, everyday costs, fixed and variable, you've got your income. So in this case, you've got your income, your partner's, your little side hustle. But essentially, what you want to try and do is your income match your expenses. So you end up with 0 because everything's been allocated for different cost points and purposes throughout the month. But interestingly there, you can see £200 of it, they've allocated towards savings. Whereas if they didn't have anything going towards the savings, you would have £200 left over at the end of the month. The idea of this approach is to try and make sure that every pound goes as far as it possibly can. So that money, rather than just staying in an easy access account, maybe with your current account not earning a lot of interest, you can put it into a savings account, which is actually going to make that money go further and earn money in terms of return on that. The Money Advice and Pension Scheme recommends, a 50-30-20 rule in terms of saving money and budgeting. So what does that mean? 50% of your income, they want you to focus on your needs, so everyday needs, and such as your mortgage, your rent, your utilities, your bills, etc. 30% they recommend should be going towards your luxury items, whether it's memberships, TV subscriptions, etc. But they want people, civilians, to start saving about 20% of their income towards savings goals. That's the aspirational amount. Now, I speak to a lot of people, and cost of living crisis we're living in, they're finding it incredibly hard to find 20% to save. At the credit union, the minimum savings is £10 a month, and people really do struggle to find £10. So what I say to people is don't necessarily focus too much on the percentage, just focus on the behaviour of actually starting to save. Even if it's a small amount, if you can save that minimum of £10 a month with a credit union, it's a great place to start. You start that savings journey. The sooner you start it, the easier it becomes to build that savings habit, and you can then build it up as your career progresses, pay rises, bonuses, etc. You can start to build that savings pot. The final method I just want to talk about was something called pay yourself first, and this is particularly relevant with the credit union as a free employee benefit. So this is where your money comes in, you get paid, but before you've paid any of your expenses, you know you can take money out straight away just into a savings account, so you don't even see that money, so it's just diverted straight into a savings account. And people like that because they don't see the money, it's taken from source, in our case, straight from your payroll, goes into a savings account. Because they haven't seen it, there isn't that temptation to spend it. And obviously then they're left over and they've got money left to pay the rest of their expenses. So that's a pay yourself first approach. And why do our members like it? How do we know? We surveyed our members. You can see that 91% of our members said that they improved their financial resilience as a result of saving with repayments from their salary. So your employee has made it possible for you to save straight from your pay. That's actually facilitating the pay yourself first budgeting method, which is a really good way of helping to drive that savings pattern. Just because the money's taken out straight away, people don't miss it, they then just adjust their spend accordingly. So it's something to consider. We know maths, Excel spreadsheets aren't for everyone. So if you want to approach a budget for yourself, we've done a free tool that can be used for anyone online. Go onto our website, you can search Budget Planner, and you can just put in your different expenditure items. We've even listed a few to prompt you and give you some ideas. You can then work out, what your income, your expenditure is, and what you have left over at the end of the month. There are certain things that maybe you need to think about in terms of habits to avoid as well when it comes to budgeting. There might be things that you think, I want to save money, I want to do a budget, I just can't find that money to save. Carrying a large credit card debt can be cause problems for some people. Some people just pay the minimum every month on their credit card just because it's automated on the standing order, it takes care of itself. That can be a really expensive way of paying back that credit card, and in the long run you're going to be paying a lot more than you would if you tried to clear it sooner rather than later. So that's a way of just freeing up cash. Obviously spending more than you make. Obviously it goes without saying, if you do your budget and you end up and you haven't got money left over and you are spending more, something has to change. If you carry on that cycle, things are only going to get worse and you're going to be dipping into your overdraft. It's going to be impacting your credit profile, etc. And then also shopping because it provides immediate gratification. If you're someone that's an emotional spender, I spoke to someone recently that really struggled to save. They'd never done a budget, so I said, first step, do a budget. They said, Rob, I can't avoid going into the supermarket and I just see something and I need that, and then I buy this. And I said, you're reacting to your emotions there. Like, you need to go in, and as simple as just making a list and being disciplined to stick to that shopping list could be a way of actually helping you save money if you know that you respond emotionally when you're spending money. Even online shopping. If you're someone that goes into a shop, grocery shopping for example, and spends on these items that you really don't need, just sticking to that list on your online shop could be a way of actually getting around that. So try and avoid that. Cutting back on expenses where you can. Again, people say to me, yeah, I've done my budget, I can't save. Well, now you've done a budget, hopefully you've identified different areas of where you spend your money. You might be surprised how much these things cost. For example, if you're a coffee drinker, you can see here, the average price for a cup of coffee is coming in about £3.40, okay? So let's say you work Monday to Friday, you buy a coffee a day. How much does that actually cost? If you drink one a day, 5 days a week, that's £884 a year just spent on coffee. So again, just taking out one coffee a day could actually pay for the cost of a holiday, cost of Christmas, for example. There's ways of saving there. If you're not a coffee drinker, you drink alcohol, or you might do both. Average cost of a pint, I'm not sure where these stats came from, my colleague put these together, but it seems cheap compared to where I've been drinking recently. But £3.95 average cost of a pint. Now, data suggests that the average drinker probably drinks about 8 pints a week. So when you add that up, £1,600 a year just on that, on alcohol. And then takeaway, again, seems quite cheap. This is per person, £12. Most of us probably spend more. One takeaway a week equates to £624 spent across the whole year just on takeaway. So if you're someone that struggles to save, straight away there, you can see that's just over £3,000 that can be saved just from those different areas of expenditure that are kind of non-essential. But again, until you identify how much you're spending in these areas, then you can take the ownership to make those changes and make those savings. There's saving money on energy. We're in a cost of living crisis. There's things you can do, small steps you can do to save some money. Draft proof your property, where you've got drafts coming under your door and your windows, even just putting a towel there or an old curtain. That can save you up to £125 every year. Turning your thermostat down by 1 degree, £105 a year. Standby mode on your appliances, so turning that off can save £65 a year. Fitting an aerator. A lot of people say, what's an aerator? Just a little gadget you put at the end of your taps or your shower, and it basically uses the same amount of water, but just controls the pressure and just maintains a high pressure. And it can be a way of saving, saves you £30 a year. Having a shower, so swapping a bath for a 4-minute shower once a week, £20 a year. And then kettle usage, you can see there, avoid overfilling your kettle, only use it when you need it, can save you £13 a year. Now these are small savings, I know, but if you do it all as a collective, those 6 steps there, that can save over £300 a year. So again, people that say, I can't join the credit union, I struggle to save £10 a month, by doing some of these, frees up cash straight away, and you can find that money to be able to save. You may have existing deals that you might want to consider switching to try and save some money as well, to free up some cash. So find how much you're paying at the moment, whether it's a mortgage, whether it's insurance products or mobile phone bill, for example. Broadband, you might be able to switch and make some savings. A lot of people just fall into the trap of using the same providers. They might have a discounted price for when you're a new customer, and then it just goes up over time. So be aware. You might want to renegotiate and shop around. There's loads of comparison sites. You can see if you can get a better deal. So just again, it's about taking ownership, thinking about where you can make these savings. A lot of our members don't feel like they take a lot of pride about the work they do, and they feel like they shouldn't be claiming benefits, and that's for other people more deserving than them. When actually I say to them, there's £16 billion worth of unclaimed benefits from society from across 8 million households. That may be yourselves. Listening to this webinar, if you go onto our website, there's a free tool, it's a benefits calculator. You can put in your personal information. There's no personal data, it's just an overview of your circumstances, and it will show you how much you may be able to qualify for and claim back in terms of tax and benefits. Worth doing. You may actually save some money. So take a look at that. As a credit union, we're incredibly passionate about helping our members save. Ideally, we want everyone to save money to be able to then build that financial resilience. We know it's incredibly difficult throughout the cost of living crisis, hence why we're doing these sessions, these online sessions. We are there as an option if you need to borrow money. We can't help everyone, we are responsible lenders, but we'll try and help you where we can. You need to know, no matter how tough things get, try and call the credit union if you need financial support. We'll try and help you where we can. If we can't, we will always signpost you to the support services you may need. Key benefits, payroll deduction. So your employer allows you to save and borrow with the repayment straight from your pay. It really helps with saving, like we've seen from those budgeting mechanisms. There's no hidden fees. It's free to join. You can close the account whenever you want. There's no early repayment penalties on any loans as well. You get free life cover, so it gives you an added peace of mind. So should the worst happen to you, we double the first £25,000 of your savings or clear any loan you have. That's up to the age of 65 on the savings. There are pre-existing medical conditions and T's and C's that do apply, but again, it gives you some added peace of mind. It's a free benefit there. We're safe and secure, so we're regulated by the FCA and the PRA, that's the old Bank of England, and savings are protected by the Financial Services Compensation Scheme up to £85,000, just like a bank or building society. What's more, our team are on hand, got the personal touch. If you need to speak to someone, and most people in financial difficulty may have a story, pick up the phone, speak to our team. They're available Monday to Friday, 9 till 4:30. This is us, that's the app. Feel free to download the app. If you want to kick off your savings, just use the promo code WMP10 and that'll give you £10 to kick off your savings. Thanks for listening.